So I ran into some trouble a couple of months ago, almost a year ago now. It was August of 2012, and I had decided that we needed a bigger house. We have 4 children. It was a 3-bedroom, smaller, 1,500 square foot house, and we were about to pull our hair out, so we needed some more room. So we started doing some research, and at that point I figured my credit probably wasn't at the exact place that it needed to be in order for us to buy a house, but I wanted to start taking the steps in order to making it where it needed to be. So I pulled my credit. You can do that on freecreditreport.com. You can give them your credit card number. It costs $1 to get your credit immediately, which is fine. Just make sure that you call them and cancel your account immediately, or I promise they will charge you the next week. So I did that, and I pulled up my credit, and it was like 5 something, 570 I think is what it was. My husband's was high 5s, low 6s. So I was kind of freaking out because there wasn't really any way for us to buy a house at that point. We were going to go get a VA loan because it's 0 down. My husband was in the Marine Corps, so we were eligible for this. And the VA loan is so much similar to a conventional 0 down, like a USDA loan that you can do 0 down, but you pay private mortgage insurance. That's the main thing about the VA loan. But you still have to have a 620 in order to qualify for a VA loan. Lots of the conventional USDA loans, you have to have like a 640 or a 660. I know lots of credit unions, if you're trying to build a house, will want a 660 credit score. Now, what I needed help with was understanding how these credit scores are computed. So I called a man that I knew that was a lender, and I started asking him some questions. Well, he told me a couple of different things that I never would have thought of and never would have realized before. First things first. I thought that because I had a credit card that it was a $300 balance, it's from Capital One. I thought that if I had that credit card and that if I paid my bills on it every month and if I paid it off, that was showing that I was responsible and that the credit card companies would like that. Wrong. That is the biggest misconception on credit ever. It's not what you want to do. If you pay off your credit card balance every single month and you go above 15% of what your limit is, how do you find that number? First of all, I know a lot of us, it's been a while since we've been in school, or you just don't remember how to do percentages. This is super simple. So if your credit card limit, the amount that you're allowed to spend on it is $2,000, you're going to take $2,000 on your handy-dandy little calculator, iPhone, whatever, and you are going to times it by 0.15 to get your percentage of how much you can actually spend. So don't spend over that 15% mark and make minimum payments every month. If you keep your balance at 0 every month, you're not showing that you're any risk, and it's not helping your credit, nor is it hurting it. If you want to help your credit, you're going to pay a little bit of interest. That's okay. So I have that $300 a month card, right? So I have $25 that I keep on it, that I pay like $6 or $15 every month on it, and I just keep putting 25 or 50 bucks on it every single month, and that helps me build credit. Now, the amount of points that it helps build based on everything else that you have going on in your credit history. So I can't tell you exactly how many points it is that you will actually gain, but I can tell you that it'll help you. It won't hurt you if you pay minimum payments every month. So next, something that I also didn't realize, if you're going to have credit cards, they really do help you, but you need 3 lines of revolving credit in order to actually boost you up over that like 650, 700s kind of mark. So make sure that you do have 3 credit cards. That's how you're going to build your credit. People are like, oh, I don't want credit cards. Well, I don't want credit cards either, and we're virtually debt-free, but I'm going to have credit cards and have a minimum of $2,000 in combined credit limits and have 15% balances on those cards for the pure and simple fact that it helps you build your credit. It shows your creditors, and it shows the credit bureaus and the computer system that actually formulates your credit score that you're a lower risk because you're not buying or you're not paying your bills every month on this credit card and then paying it off as soon as you get paid. That shows them that you're a high risk. If you're using it to make smart purchases and you're not overblowing the amount that you're allowed to actually use on it and you're making those minimum payments, it's showing them that you're responsible with your money. Stupid and screwed up, I know, but that's the way that it works. That's the system. So, good debt versus bad debt. A house is considered good debt. Car loans, any kind of installment loans, revolving debt like that, those are bad debts. So, as soon as you can, get rid of car loans, get rid of anything like that that you pay interest on except for your house. Any house loan is going to be a good loan. So, in order to have whatever perfect credit is, don't miss your payments. First of all, they can't mark you 30 days late unless you hit that 30-day mark. So do your best to not miss that. And you can watch my other video on getting collections accounts removed off your account. Now, here's the thing. I originally hired Lexington Law until I figured out that I could do the same thing for myself for free. Don't go pay one of those companies. In my other video, I tell you exactly how to get that stuff removed off of your credit report. You can do it yourself without having to pay them. So, my name's Kristina Ray. I am not a financial or a debt counselor at all whatsoever. I am just a mom of 4 kids who figured out how to do this on our own because I really needed to get into a bigger house, but it worked. I put my credit, it was a 573 when I started. It is a 705 today. It only took me 2 weeks to bring it up 115 points, and now it's skyrocketed past that because I finally figured out how credit really works. So if you're paying off those credit cards every single month and blowing the total limit on it and paying it off thinking you're actually building your credit, that's the biggest lie about credit possible. So don't do that anymore. My name's Kristina Ray once again. I am actually a health coach. I help people lose weight for a living. So once again, this is not any professional advice. This is just what happened to work for me, and I hope that it works for you. If you have any questions, you can leave a comment or a question, or you can write me a private message and I will get back to you.